presentation. I am Vinay Kumarsi, the subject Financial Accounting 1 for first semester BCom as per choice-based credit system. Dear students, last class we have discussed some of the features and importance of depreciation accounting. So let us discuss the methods of depreciation. There are four types of methods under depreciation. The first one is straight line method, the second one is reducing balance method, third one annuity method, and last one depreciation fund method. So these are the four methods of depreciation. So let us discuss one by one. The first one is straight line method. So it says it is a fixed installment system, and also it is called as an original cost method. Under this method requires allocation an equal amount each period. That means the asset is written down in value each year by the same amount. So under this method a fixed percentage of the original value of the asset is written off every year. So the formula for calculation of depreciation is amount of depreciation equals to cost of the assets minus scrap value divided by estimated life of the asset. So again, if you want to know about the rate of depreciation, the formula for this rate of depreciation equals to amount of depreciation divided by original cost multiplied by 100. Okay, so hope you have learned a few things about a straight line method. Under this method the percentage of amount will be deducted every year. For example, 10,000 rupees. So every year the 10,000 rupees will be deducted from the asset as a depreciation for all the years. So that is the condition. Okay, so next move on to the another method called as written down method, and also called as reducing balance method, and also one more, it is diminishing balance method. Under this method the first year whatever the depreciation we are deducted under the asset, the remaining amount, okay, for that amount we are going to calculate the depreciation for that amount for the next year. So for example, in today's the current year it should be the cost of the machinery is 1 lakh, so the depreciation is 10,000. So 1 lakh minus 10,000, 90,000 rupees is the remaining amount. Okay, for second year what about the depreciation? So 10% of it, so 90,000 multiplied by 10 by 100, so 9,000 is the depreciation for second year, right? Again you move on to the next year, third year. Under the third year 90,000 minus 9,000, so 81,000 is the remaining. For 81,000, 10% of it, so 81,000 multiplied by 10 by 100, 8,100 is the depreciation for third year. Like that the depreciation is calculated. But under first method, under the straight line method, every year 10,000 rupees is to be deducted. That means 10% of it. It is an example. If it is the example is the rate of depreciation is 10%, the 10% of the amount will be deducted every year. In diminishing method, here also we are going to deduct the 10% of it, but that rate of depreciation is taken on the balance of the amount of the first year and second year and third year, like that. Okay, so under the annuity method, so the amount of spent on the purchase of an asset which is assumed to earn the interest at a certain rate every year, the asset account is debited with the amount of interest and credited the account at the beginning of the year. Hence the amount of depreciation is the same every year, but the interest will be diminished each year. The amount of annual depreciation to be written off is ascertained from the annuity table. So here the present worth of the annuity of one payable for different years at varied rate of interest. So for under the annuity method we are using the annuity table for that. So for example, for 10,000 rupees what will be the interest. If you are invest that money in somewhere, what would be the interest? Okay, we will deduct that amount and then we calculate the depreciation. Like that the procedure will be going on. Okay, so as per the purpose of the examination, the first two methods are too important. Straight line method and diminishing balance method are too important. Move on to the last method, that is depreciation fund method. It is also called as the sinking fund method. Here here the every year, so whatever the amount we are deducted and as well as the cost of the asset that will be invested in somewhere and getting the interest. Okay, again we deduct the interest, add the interest and deduct the depreciation, and again we put for investment for second year also. So again in second year we are going to get the interest and add the interest and deduct the depreciation. Like that the procedure will be move on. So anyway, here the amount of depreciation is retained in the business itself in the form of asset, not separate from the other asset. So an amount equal to the annual depreciation is charged against the profit. So like that the calculation will be done towards the depreciation fund and or the sinking fund method. Okay, anyway, come to the point of straight line method. So we will do one or two problems towards each and every method. The first two methods are too important, and then next the other two methods will not be given and from the last few years. The problem may not be comes in the next two methods from the last few years. Anyway, we will do the problem each and every one. Under the first method, so what about the rate of depreciation? So see the problem here. Satkar Limited purchase a machinery for rupees 60,000. So this is the cost of the machinery, on which date you are purchasing on first 2014, right? Depreciation is to be charged annually on straight line method. So they are clearly told that each and every year we are going to calculate the depreciation on the basis of straight line method, right? The usual working life of the machinery is 5 years and it will fetch for 10,000 and the end of the price when it is sold. So this amount will be the what amount? So this amount will be the reduced asset value, that means it is a scrap value. Prepare machinery account, assume that the books are closed on 31st December. So what will be the accounting year for this problem? 31st 3, every year 31st 3 the accounts will be closed. So move on to the calculation. In this problem, cost of the price and the scrap value and also the estimated life of the machinery will be given. So the amount of depreciation should be take down the formula. Depreciation is equal to cost of price minus scrap value divided by estimated life. So on 1/1/2014 we are purchased 60,000 minus on the end of the fifth year the machinery value would be 10,000. So that will be the scrap value, 60,000 minus 10,000. For how long we are having that machinery? 5 years. So divided by 5, so 10,000 should be the amount of depreciation. Okay, so in this chapter we need to do a machinery account, depreciation account compulsory. So where we are doing the machinery account? In the books of Satkar Limited, right? Okay, the ledger should be date particulars amount, left hand side is debit, right hand side is credit. Take down the journal entry. So we are doing the ledger. The first transaction is purchase of machinery, on which date we are purchased on 1/1/2014. What will be the journal entry? Machinery account data to bank account. So we are preparing machinery account. So on the left hand side to bank account, how much? 60,000. So this is the first year amount of purchase. For that, the depreciation is, so what will be the journal entry? Depreciation account data to machinery account. So by depreciation account, on which date we are calculating the depreciation? On 31st/12/2014. So this is the end of the year. So by depreciation account 10,000. So any other transaction? No, there is no other transaction. So right hand side total is 60,000. Sorry, left hand side total is 60,000. So we should take 60,000 on both the column. Deduct 10,000 from 60,000. The remaining amount is 50,000. So that is by balance carried on. So that 50,000 amount carry forward to next year. So 1/1/2015 to balance brought down is 50,000. So we are doing a straight line method. So fixed amount of depreciation should be deducted each and every year. So we are doing for 5 years. So the second year also the depreciation is 10,000. The journal entry as usual, depreciation account data to machinery account by depreciation account 10,000. See here under the problem they are given one mistake. The accounting year is 31st December. So I told 31st/3. So in a especially in generally it is 31st/3, but in this problem they are told 31st December is the accounting year. So it starts from 1st January and it ends with 31st December. So there is no any maybe there is no mistake. So I mistakenly I told 31st/3. So normally it is 31st/3, but in this problem they told 31st December. So we should take 31st December only the accounting year, right? Okay. Okay. Second year also we are deducted 10,000. So out of 50,000 we deduct the 10,000. The remaining amount is 40,000. Similarly, that 40,000 is also carry forward for 1/1/2016. So again we deduct the depreciation 10,000. The remaining amount is 30,000. That is also carry forward 30,000. In fourth year also we deducted 10,000. So the remaining amount is 20,000. In fifth year again we will deduct the depreciation 10,000. Right? The remaining amount is C. In the fifth year, to balance brought down is 20,000. The depreciation 31st/12/2000 every year. The end of the month will be the depreciation amount calculation date 31st/12/2018. So depreciation account data to machinery account by depreciation account, sorry, 10,000. Again in the last year we are having the scrap value. That's also we sold. What is the entry for selling? Bank account data to machinery account. So by bank account 10,000. Okay. So the account will be tally in fifth year. Some problem it will be tally and some other problem it may not be. Okay. So the students, for the purpose of examination, this chapter is too important. So this type of problem definitely came to your examination. So please take down the notes and practice each and every classes. Okay. Thank you for watching.